Are you trying to get approved for a loan?
Oh, it's you. Well, just let me ink up my old denied stamp.
Do you need to improve your credit score?
Ain't nobody got time for that.
In today's video, you'll learn how to improve your credit score in Canada. So if you want a better chance of approval, lower interest rates, and a bigger loan for things like a certain credit card, mortgage, or a new car, then make sure you watch this video till the end. What's a good credit score? According to Equifax, a good score ranges from 660 to 724. With this score, you'll likely get approved for most loans with average interest rates and offers. 725 and above will be considered very good and excellent, and you will likely get approved for all loans with the lowest interest rates and the best offers. Below 660, you will most likely not be approved for most loans, and if you do, they have high interest rates and the worst offers. Take note that your credit score isn't the only factor lenders use when applying for credit. Lenders may also make a decision based on income, debt to income ratio, capital like savings, assets, and investments, even employment history, length of time in a current residence, or how often you change your phone number. Also note that lenders may also be using a different scoring model. So your Borrowell or Credit Karma score may not be the same score that lenders use. This includes directly from Equifax and TransUnion. Although they won't be the exact same score lenders use, they are your most useful tool when figuring out your credit score and your credit report. So what are the fastest ways to improve your credit score? Number one, check for any errors on your report. You have the right to dispute any errors on your report for free with the credit reporting agencies. Errors can be something like a missed payment, which you actually made on time, can be negative information that's still listed after the maximum time they're allowed to list it for, or maybe even accounts that you've never opened. You might be a victim of fraud, and the only way to find out is to check your credit report history. Removing any errors from your report can be the quickest way to give your credit score a big boost. Number two, get a late payment removed. Payment history is worth 35% of your credit score. Just one late payment can ruin it. And the longer the late payment is, the worse. There's 3 levels of late payments. 1 month late, 2 months late, and 3+ months late. So if you have a late payment, try to pay it off as soon as possible. Now there is a possibility to get the late payment removed. Call the lender and plead your case. The chances to get it removed will depend on how late you are and how much you owe. But it doesn't hurt to try. Also, if you know you're gonna be late, call ahead of time and they might give you extra time to make a payment. Number 3, pay off as much as you can on your credit cards. 30% of your credit score is your utilization rate. So if you have a credit card limit of $10,000 and you owe $5,000, you are using 50% of your available credit. It's best to try and keep your utilization rate below 35%. To get max points, keep it under 10%. So if you have a $10,000 limit, try to only spend $1,000. If you got the money, pay off your credit cards. If you got multiple cards, try to use and pay them off around the same percent because utilization is per credit card. Number 4, get another credit card. Although applying for another credit card will take points off your score, having more credit available can improve your utilization rate, which will increase your credit score. But be aware that if you don't get approved, it will damage your score. Also, according to Equifax, I have too many credit cards. 6 of them. So don't go overboard on the credit cards either. Number 5, ask to increase your credit limits on your credit cards. You should try and increase your credit limits on your existing cards before trying to get any new cards. This way, you improve your utilization rate without getting a hard inquiry. Another thing you can do to keep your utilization rate low is ask your credit card companies when do they report to the bureaus. With this knowledge, you can make a big payment just before they report to increase your score. This method can be good to use just before you're ready to apply for more credit. This way, you can get a few extra points to be safe. Number 6, request pay for delete. If you have anything sent to collections, it counts towards your payment history. So anything in collections can greatly reduce your score. If you have the funds available, call the collection agencies and try to work out a deal. You may not have enough to pay them fully, but if they like the number that you offer, you can clear the negative information in the collection section of your report. Be aware that you still might be able to see the original debt in the account section, but removing it from collections will increase your credit score. Number 7, pay your bills on time. The most important factor in increasing your credit score is paying all your bills before they are due. You just need to make a minimum payment to improve your payment history. One way to make sure you don't miss a bill payment is to set up automatic payments. so you can set it and forget it.
Well, actually, you should do a follow-up to make sure the payment has been received.
Every time you make a payment on time, your payment history will be longer and your credit score will increase over time. Number 8, don't close old accounts. Your length of credit makes up 15% of your credit score, also known as credit history. The credit history section details how old your credit accounts are. So if you close your oldest credit card, your length of credit history will be shorter. Then your score will decrease. Also, if you keep getting new credit cards, your average credit age will be lower, which will also decrease your score. A good length of credit history is at least 7 years. This way, lenders can see that you could handle credit over a long period of time. To actually increase your score, you just need to let time pass. Number 9, have a mix of different credit types. Types of credit make up 10% of your credit score. There's 4 main types. Revolving, which are your credit cards and line of credits. Installment, which include car loans, personal loans, and student loans. Open, which include mobile phone plans and charge cards. And lastly, mortgage, for homes or other real estate. Having a variety of different account types can show lenders how you manage different types of credit. So having diversity in credit accounts can improve your credit score. And number 10, minimize hard inquiries. Inquiries make up the last 10% of your credit score. Every time you apply for credit, it will be a hard inquiry and it will affect your credit score negatively. There is exceptions, like when applying for a mortgage, you could have multiple inquiries in a certain time frame and will only count as one inquiry. Hard inquiries can stay on your credit report for 3 years with Equifax and 6 years with TransUnion, but your last 5 inquiries will always remain visible. And I should mention that checking your credit score with Equifax, TransUnion, Borrowell, or any other company that offers free credit scores will count as a soft inquiry and will not affect your credit score. Now, if all Canadians knew that, that'd be great. So only apply for new credit if you really need it. A good rule of thumb is to only apply for new credit once a year. Just by doing this, you can increase your credit score. Now, what won't increase your credit score? Authorized users. In Canada, being an authorized user on someone else's credit card will not affect your credit score at all. This is only true in the States. Also, be wary of credit repair companies that say they can improve your score 100 points in 30 days. The most they can do is fix errors on your report or dispute any negative information, whether it's an error on your report or you actually did it. Or they can offer you these credit builder loans, which can cost you a lot of interest plus the other fees they charge. Any of these things you can do yourself. You can even find online your own credit builder loans. But I would recommend instead a secured credit card. These secured credit cards are usually for people with bad credit. Check out this video up here if you want to know my top 3 picks for secured cards. Also, you may want a secure credit card if you just turned the age of majority or if you're new to Canada. There is other ways to build your credit if you don't have any credit history. If you don't have any, check out this video. My final thoughts: if you already have a decent credit score, like 700 plus, I wouldn't worry too much about improving it. Just try to maintain it. And over time, your score will grow passively. If you have a bad score because of a late payment or collections and you can't get rid of it, they will disappear from your report 6 years after your last payment. So again, you'll just have to wait it out. And you can't manage what you don't know. So check out the video description for my link to download Borrowell so you can get your free credit score and your free credit report. And if you want to learn more about Borrowell, check out this video up here. That's it for this video. If you haven't already, make sure you subscribe and hit the bell icon to get notified when a new video comes out. If this video has brought you any value, hit the like button and share it with a friend. Doing so helps this video reach more people and helps my channel grow. And don't forget to comment for the algorithm. Thanks for watching till the end. Until next time, keep making money moves. Peace!